Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday the 20th of December in London. I'm Stephen Carroll. Coming up today, Republicans and Democrats reject a last-minute proposal from Donald Trump and Elon Musk to suspend the US debt ceiling, leaving a government shutdown now just hours away. Keir Starmer gets set to appoint Peter Mandelson, one of the leading figures of the Blair-Brown years, as the UK's ambassador to the United States. Plus, keeping things private. We take a closer look at why so many firms are opting against listing and why it's creating a headache for public markets. Let's start with a roundup of our top stories. A US government funding plan backed by President-elect Donald Trump and Elon Musk has been rejected by the Republican-led House of Representatives. The two men insisted Republican lawmakers abandon an earlier bipartisan deal and instead back a proposal to suspend the debt ceiling for 2 years. However, 38 members from Trump's party voted with Democrats against the proposal. Here's Republican House Speaker Mike Johnson speaking after the vote.
The only difference on this legislation was that we would push the debt ceiling to January of 2027. I want you all to remember that it was just last spring that the same Democrats berated Republicans and said that it was irresponsible to hold the debt limit, the debt ceiling hostage. What changed? It is, I think, really irresponsible for us to risk a shutdown over these issues on things that they have already agreed upon. I think you need to be asking them the questions about that.
But what's the next step?
We will regroup and we will come up with another solution.
Mike Johnson speaking after Elon Musk had called the bipartisan version of the stopgap funding deal a crime in a post on social media. He'd urged lawmakers to shut down the government rather than pass it. Here's Democrat Representative Jamie Raskin on why he voted against the subsequent revised plan from Republicans.
We are an independent branch of government, and the U.S. Congress had an agreement that Democrats on both sides, Republicans on both sides agreed to, and it was blown up by a tweet by Elon Musk. And so there's no way we can reward that behavior.
Jamie Raskin making his feelings clear as the rejection of the revised bill by lawmakers sets the stage for a potential government shutdown, with funding set to lapse on Friday night unless a new solution is found. Peter Mandelson is set to be appointed as the UK's ambassador to the United States in an effort to spare Britain from being hit by trade tariffs under Donald Trump. Bloomberg has learned the Labour Party veteran and former EU Trade Commissioner is expected to take the post next month. Prime Minister Keir Starmer set out the number one job for any new ambassador yesterday.
I'm not a fan of tariffs. We have to make sure that we avoid tariffs. We've got very good trade with the US, as we've got very good trade with other countries around the world. I want to improve on that.
Although Starmer has met Trump, relations between the two are seen as difficult. In a podcast last month, Mandelson said if he were in government, he'd be trying to build a relationship with Elon Musk. The UK government is mulling tougher election finance rules as rumours swirl of a mega donation from Elon Musk. The tech billionaire is reportedly weighing a donation of as much as £78 million to the right-wing Reform UK party. Bloomberg's James Woolcock has more.
£10 million. That's the largest amount ever given to any UK political party in one go. Elon Musk met with Reform UK's Nigel Farage this week and apparently was eyeing that record. Reform's deputy leader Richard Tice says all parties take donations.
I think an international businessman, as long as it's legal, under the Electoral Commission laws, as the Labour Party have accepted donations, as the Tory Party have accepted donations from international businessmen, yes, it's absolutely fine.
But it's those rules that Tice mentions that Labour are thinking about tightening. The election watchdog has long wanted to limit donations from companies like Twitter UK to how much they earn in Britain. Whether Labour choose to change those rules or not, it's yet another sign of the threat their party faces from Reform if they can't deliver. In London, James Woolcock, Bloomberg Radio.
The Bank of England is promising a gradual approach to future interest rate cuts after it held rates steady in its decision yesterday. 3 of the 9 members of the Monetary Policy Committee voted for a cut, despite 2 surprise overshoots in pay and inflation data this week. It's a sign the central bank is becoming less sensitive to data shocks and is shifting to relying more on its own forecasts. Here's BOE Governor Andrew Bailey.
I would caution a bit on the numbers we've seen this week. They were a bit of a surprise.
think in spite of everybody, actually. Now, there was quite a bit of noise in the data coming from things that happened a year ago. There was a fairly unusual fall in the rate of growth of wages this time last year, which didn't last, and that's come out of the series. So just a bit of caution there.
Bailey was speaking after policymakers rejected traders' analysis that inflation in the coming months will prove too persistent to allow further reductions in borrowing costs. Markets are now pricing in 2 quarter-point rate cuts next year. The UK has recorded its worst November car production numbers in 44 years amid lacklustre demand. According to the Society of Motor Manufacturers and Traders, output plunged 30% from a year earlier, marking the 9th straight month of decline. The sector has been facing a downturn for years owing to higher costs and Brexit-related trade costs, further complicating the electric vehicle transition. Last month, policymakers pledged to review the UK's EV sales mandate. Critics say the government hasn't done enough to stimulate demand. And the French Prime Minister François Bayrou is aiming to present a new cabinet this weekend. The Prime Minister is also hoping to deliver a budget by mid-February, warning that failure to navigate the country's current political challenges could be catastrophic. He's been holding consultations with party leaders to form a new administration after the previous government fell in a no-confidence vote earlier this month. And those are your top stories on the markets. US equity markets closed in the red for a third day running. The S&P 500 erasing earlier gains to finish down 0.1%. FedEx shares soared 9% after the bell on news of a spin-off of its freight business. Nike shares jumped by as much as 11% before retracing on its earnings release as well. 10-year yields on treasuries climbed as high as 4.59%, up 5 basis points. The dollar also resuming its uptrend, touching the highest in over 2 years. After the Bank of England decision, we saw sterling weaken by 0.6%. Today, it's another 0.1% weaker at 124.90 against the dollar. Front-end yields also moved lower on that dovish vote count. In Asia, equities are trading in the red. The MSCI Irish Pacific Index down by 0.6%. In a moment, we'll bring you more on the US looming government shutdown, plus why some of the world's fastest growing companies are choosing to stay private. But first, another story that caught our eye this morning. And this is about the music that gets played in luxury shops. Ed Stapley from our Pursuits team has been writing about this. He's been talking to an agency called Grey V. They specialise in creating playlists for retail and hospitality brands. Now, in their eyes, the music that you hear when you're shopping or dining has 3 goals. First of all, to get you into the shop. Secondly, to create an environment that aligns with the brand's identity and, quote, emotionally resonates with the audience. And thirdly, to provide seasonal inspiration on upcoming collections. Lots of interesting thoughts in the science or the philosophy behind this as well. When the agency is targeting younger audiences, they want to pepper in new music with things that might sound familiar because perhaps they're trending on TikTok. Some clients actually send 20 to 30 page briefings, including colour samples, to help them design what you should be listening to. Of course, as you might imagine, some brands have very specific requirements as well. For example, no songs that reference breakups in Tiffany's. On Christmas music, often a controversial choice, a tough call. Most luxury brands, though, don't want to offer what people are getting elsewhere. You can read more in Ed's piece, How Music in Luxury Stores has chosen to steer shopper behaviour. It's on Bloomberg.com and on the terminal. Now, the United States government heading towards a shutdown tonight unless a new funding package is agreed. That's after the plan backed by Donald Trump was rejected by the Republican-led House. Our senior editor, Bill Ferries, joins us now for more. Bill, the temporary funding bill was meant to keep things going until March. What went wrong?
Well, you're right. This is a meltdown that is still in progress here. So there was a second bill that was proposed that really kind of fell more in line with what Donald Trump has wanted. It had some of the it had basically an extension of the or increase in the debt ceiling, and that was one of the key provisions Trump wanted. But there are core Republicans, conservative Republicans, who basically under no circumstances ever support increasing the debt ceiling. And you saw a group of those come out. So you had basically Democrats vote en masse against this changed bill that Trump wanted. And then you had, I think, 36 or so Republicans who went against their party's leader, they went against Donald Trump's direct threat that they would face opponents in their next election and said, no, we're not going to vote to extend or increase the debt ceiling by 2 years. That ceiling is expected to affect the U.S. government in the spring, but really the Treasury can make some maneuvers to extend it until early summer. Donald Trump and the Republicans don't want to have that fight next summer in his first few months in office, but there are core Republicans that were unpersuaded by this argument.
So what happens now? I mean, it's the 20th of December. Presumably, a lot of these lawmakers were hoping to leave Washington for Christmas. Is another deal possible?
Well, anytime, as long as there's more time, a deal is possible. The deadline before you have a partial government shutdown is late Friday night. So I think everyone in Congress, particularly Speaker Mike Johnson, are going to be working to try to see if they can kind of thread that needle between what Trump wants and what both some Democrats and more Republicans can support. So I'm not exactly sure how he does that. Maybe there's a shorter term extension of the debt ceiling and increase, so that doesn't come up quite as soon. But Democrats, of course, have little incentive to make a deal here. The debt ceiling fight is something that will potentially do some damage to Donald Trump next year. Democrats are going to let Republicans sustain that damage if they can.
I mean, Donald Trump's not president yet, we should remind ourselves. How damaging is it for him?
Yeah, you're only supposed to have one government at a time in any country. It will be a damaging fight, I think, for Republicans if Donald Trump cannot get an increase in the debt ceiling pushed back further. It's not a symbolic fight, but the debt ceiling increase is something that Congress appropriates spending. And then usually later on, they hit that debt ceiling. It's kind of one of these backward things that the party that is not in power likes to use as a cudgel against the White House. But it will be a damaging fight for Donald Trump. And this whole fight right now is really testing his strength, even with his own party, when he's heading into a presidency and administration in which he will control the White House, the Senate, and the House of Representatives. It just goes to show you don't have complete power even when you have a majority.
What about Elon Musk in all of this? Because he had supported this revised plan, the one that didn't get through. Is he learning the realities of Washington politics before he takes up his new role?
Well, Elon Musk has, among his many tweets in the last several days about this, he said that he's okay with the government going into a shutdown and staying that way until Donald Trump takes office on January 20th. That would be, if it happened, one of the longest government shutdowns in history, and it would also make it very hard to plan Donald Trump's inauguration. So that's unlikely, but Elon Musk is taking a, burn your ships approach to this. And I think there's going to have to be, whether it's Speaker Johnson, Donald Trump, or other Republican leaders of the House and Senate, there's going to have to be some reality injected into this, because you do need to have a functioning government between now and Trump's inauguration. Okay, Bill Ferry's our senior editor. Thanks very much for joining us. Now, IPO bankers are gearing up for a bumper year in 2025, but even in the US, initial public offerings are still recovering from the interest rate hiking cycle. At the same time, there's been an explosion in private credit. Apollo estimates the industry's already worth $20 trillion and could reach $40 trillion in the next 5 years. And with that expansion, some of the world's most exciting companies are remaining in private hands. Think SpaceX or OpenAI, both worth over $100 billion, but show no signs of going public. I've been discussing this with Bloomberg's Bailey Lipschultz, who covers how companies go public, and I asked him how deeply this trend of staying private goes.
It is a widespread trend that has been really taking place over the last 2.5 decades. When you look at the U.S. alone, the number of publicly traded companies has been cut in half from about 7,500 to 4,000. So this is something that has been a real sea shift that has been taking place again, really when you go back to the mid-2000s, with companies preferring to stay private after the fallout of the dot-com bubble.
So why are they making this decision? Why are they choosing to stay private?
easier access to capital. We've seen such a big push from some of the biggest investors to wanting to get a piece of some of these companies earlier. You also don't have to deal with activist investors, deal with journalists kind of digging through filings and financial updates. And also, it costs a lot of money to be public. So if you can be Databricks, who just raised $10 billion at a $62 billion valuation, you mentioned SpaceX, OpenAI, and a number of other companies, they really, when you talk to management, an IPO could be the path at some point, but they prefer to stay private just because they can continue to give investors, early investors, employees access to liquidity, ability to sell some of their shares to actually turn paper profits into real cash, and they're not dealing with the headaches that come with being a public company.
But it seems like in a lot of cases, these companies are sort of keeping the option open that they could go public at some point down the line. Do we have any idea of how much money is tied up in these private companies that could, in theory, list if they wanted to?
So we've seen data with private equity-owned companies alone. There's about $2.9 trillion worth of value that needs to be either sold through a sale or brought public through an IPO. And you have a number that's pretty similar on the venture capitalist side of things. So this is trillions of dollars in terms of companies that are tied up in these private investments. It's just a question of when they would go public, what that would look like, and whether valuations make sense for venture capitalist private equity firms, or if they want that branding event where they're ringing the bell at the stock exchange here in New York and have the ability to point to a ticker that trades on the New York Stock Exchange or on the NASDAQ.
And we mentioned valuations there. How reliably can we value a company that stays private?
It's a hotly contested debate because when you look at companies like OpenAI being valued at $157 billion, that means they found enough investors who thought that that was worth writing a check for. If you're publicly traded, you're getting kind of mark to market every second that a market is open for trading. So it's a bit opaque. It's a bit of a black box in terms of how some of these valuations end up. But presumably the investors, the Thrive Capitals of the world, the venture capitalists, these private equity firms who take these companies private, they have an expectation and kind of a specialization that those numbers do make sense. But the big debate we've been seeing and why we've seen such a dearth of offerings in really the last 3 years partly has been companies were either taken private by private equity or have remained private in venture capital, and they don't like what they would get if they were to go public and sell shares to public investors and have to deal with being kind of re-rated on an ongoing quarterly basis.
Are there regulatory concerns involved here as well? If we have companies that are this valuable, talking about some that are hundreds of billions of dollars, that aren't subject to the same oversight that publicly listed firms are?
I don't think so. The expectation, it depends kind of who your stakeholders are. Securities regulations are there to protect unsophisticated investors. So you have to be an accredited investor. You have to actually have access to buying a SpaceX, and you have to kind of have the ability to get in the door with an OpenAI to actually write a check. So there are some regulatory walls put up in terms of investing in some of these companies. And just broadly speaking, as it relates to reporting, if you're publicly listed, you obviously have to have earnings every quarter and have to be kind of in the books and have lawyers and consultants and other people on the payroll. If you're private, you can kind of operate at least to some extent how you would like, broadly speaking.
Is it a problem if these companies don't ever go public? You know, we think about some of the really high-profile ones like SpaceX or OpenAI.
It depends who you talk to. If you are a company, or if I talk to lawyers and investors, as long as the earlier stage investors or employees have the ability to take advantage of the equity they've built up in the company, then there's really no reason to go public. When I talk to advisors, the question when they're talking to management teams are, why do you want to go to public? What do you gain from being publicly listed? The downside, though, is if you don't have a strong public markets, you don't have that transparency that you mentioned, you don't have the ability to kind of hold some companies accountable, and you also don't have the ability for people to actually buy some of these companies. So by the time OpenAI were to go public via IPO, by the time SpaceX could go public or Starlink could go public, a lot of that valuation and kind of growth could be sapped out of the market. And now you're bringing a company that already is one of the biggest companies in the world straight to the public markets, and investors, at least in the public markets, who don't have the ability to have access to it or can't afford to pay someone for those private investments kind of is joining the party late.
Is this becoming a question of prestige? Is it just a sort of badge of honor to be a public company, or is even that dwindling?
It feels like that is dwindling depending who you talk to. Obviously, the exchanges want companies to continue listing, but if OpenAI can be valued at $157 billion, if SpaceX can get its funding round, and employees, according to Elon Musk, don't want to sell shares, everyone knows who some of these companies are. There is still a branding event with being publicly listed. There is some validity depending on the industry you operate in, where you can talk to customers and clients and say, hey, we're publicly listed. We trade on the New York Stock Exchange. Here are our quarterly results. But for some of these name brand companies, some of the top kind of upper echelon firms, the question really is, what would be the reason to go public? And if there's not a good business reason, then for all intents and purposes, staying private makes a lot of sense.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.